Hello out there once again, traders. It is Coach Gino from TackleTrading.com bringing to you an April 16th options report. So let's jump into this. Let's get started. Quite a lengthy report I got for you. First thing we should be doing though is going to the stock report. Why? Because in the stock report, guys, I want you to take time, and every trader should be doing this. We put in the economic calendar, the futures chart, but if you just watch the first video, our breakdown of the markets and the sectors, and you can click on the sectors here and get a graph and follows up with the video. And before you get into the stock picks, I just want you to know you should be on the right side of the market. So the reason we want you to look at the markets and sectors is so you can see our top-down approach. The trend of the market's bullish, but there are a few weaknesses in the sectors, and that's what makes us pick the stocks that we do. And it also makes us pick certain options on those stocks. So what we're going to do is, if you look at the stock report, you can trade those stocks, bullish or bearish. But you can also do some option strategies. So just like our stock report, we have quite a few candidates on there. We have OIH, XOP, and so on. I'm going to pick a few of them and throw on some option strategies. One of them I like is Disney. So it's on our bullish picks in the option report. And the reason why is we got a little double, triple top going on up here. Got a nice little resistance here. And we believe there's going to be a little breakout. And if there is, my trigger point's going to go at $100.40. My strategy is going to be going long the calls. Another one from the stock report that we put on the option report is CVS. CVS has a nice bullish pullback setup. Look at the length of the candle that came in on Friday. Now, I didn't see the volume that I really liked in this one. And this now, by the way, guys, earnings is coming up. Earnings is coming up, so you definitely want to start looking ahead of time at the charts so you know when the earnings are coming up so they don't surprise you. For example, if you look at CVS right now, if you have Thinkorswim, you can notice the earnings is coming up here May 3rd. So this isn't a real long-term play, but I do like this bullish setup we have right here. And you can see the channel clear as day. Our trigger to go long on those calls is posted on the site. By the way, if you want to look at Disney one more time, Disney's earnings May 10th. So that gives us enough time on this breakout here. If it doesn't break out, we don't get triggered. There's also videos on contingent orders, so you don't have to stare at the computer every day. Definitely learn how to use those. Okay, moving right along to the Bears team. Who do we have for some good put plays? As you notice in the stock report, we saw some weakness. And where do we see the weakness in the retail was the volume. It just wasn't participating. And coming up on earnings season, the sales have been lower. Nordstrom, JWN. Looking at the setup here, JWN. Definitely bearish from this point down. Definitely bearish. But what we have is definitely a breakdown. Our trigger is below this area down here to buy puts. Looks like JWN has earnings on May 12th. Another put candidate, Bed Bath Beyond, BBBY. Nice bear retracement. Earnings has already passed. That's why I like this one. So what that means is you're going to see that the volatility is low on these options already. Let me pull that up for you. The volatility on the options being low means the options are cheap. Look how low these volatility is. That means dirt cheap options. They're the lowest at the range. So you can buy cheap options. And that is great because if the volatility comes back into this play, see it's already in a downtrend, surprisingly low option prices. If it triggers and starts going back down, you'll see the volatility spike. And that's a win-win for the price of your puts. So again, we have a trigger. Check out the site here and our stops posted for this one. I love that setup on Bed Bath Beyond. Now let's move on to the credit spreads. What can we do for credits? What can we do to bring in cash? I like this one. Gold Corp. Now, metals and miners are very bullish, and gold is not. But I like how strong the metals and mining sector is. It's one of the strongest out there. When you see this trend, it's slightly bullish, and the stock is cheap. Right away, that should trigger a strategy called a covered call or maybe even a naked put. Looking at the May 17 strike here, you can bring in about a 10% static return on a margin account. That's not too shabby in a month, a 10% static return on a margin account, 5% on a cash. Another one we've been looking at is GoPro. Now, earnings are coming up here in a little bit on GoPro, but the at-the-money covered calls 1 month out is yielding about 18% static return. You sell the 14 strike a month out on a margin account, 18% is a nice premium to bring in. And we'll do another one here for the covered call and credits. How about Fitbit? Anybody have a Fitbit out there? Let's take a look at this one. Now, Fitbit is a little band that people are wearing to track their fitness, and there's a lot of news about it. Earnings is coming out May 2nd. But what I like about this is it's cheap. It's a cheap stock. Again, under $20. At the money covered calls are yielding pretty good, but I do like the naked puts on this one. I do like 12. The 12 strike, because that's near the last support. That's near the all-time low. And they have actually decent earnings on this company. Not too crazy about all the fundamentals, but if I could pick it up at 12, that would be a great price. And I can immediately start selling calls against it. And finally, let's get into the debit spreads. Here's a high flyer, Tsla. Tsla, T-S-L-A. Nice bullish trend. Let's zoom into this nice bullish trend here. Earnings coming up May 4th, the day before Cinco de Mayo. Look how it pulls back. Now, what is it finding for support there? It's not the 20-day moving average. It's actually the past high right there. When I see that it finds support on the past high, that's a signal to me that there's definitely buyers willing to take it higher again. So check out my triggers. Now, I'm going to do a bull call spread on this. I'm going to buy an at-the-money call and sell one farther out of the money. The spread's going to be pretty wide. It's going to be about a 25-point spread. Let me double check that on my notes here on Tsla. Yeah, it's going to be about a 35-point spread, actually. About a 35-point spread. But it's going to come out very cheap, much cheaper than buying the stock. You can also do a bull put on this. You can do a bull put credit spread. But I'm actually going to wait for a trigger before I do anything. The trigger is going to be right above this high because I want to make sure this pans out. And definitely I will be out before earnings, which is May 4th. Short-term play, expensive stock. Easy way to play it is with debit spreads. Also, a great way to play expensive stocks, but very cheaply. I'm going to do this biotech ETF. The biotech ETF, notice, does not have earnings, but it will get volatile around earnings season. And when I see that the options are dirt cheap on the biotech sector before earnings, I know it's the calm before the storm. So what am I going to do? Well, I don't know if this is going to go up, and I don't know if this is going to go down. But it's going to get volatile, and those options are going to get expensive. So what I do is a strategy called a debicon. A debicon is a debit condor, which is a call spread that makes money on the way up, and a put spread that makes money on the way down. The strikes are very close. They're usually 1 or 2 strikes away. I'm actually going to do a 10-point spread on each side of this. It's very important that you look at the notes on this that are on the site on the debicon. It's a debit condor. It's a call spread and put spread. I'm doing about 10 points. You could probably do 5 on each side, but I'm going to do 10. It just yields a better delta. And this is out a month. Check it out. These are high odds trades. very good probability of making money on these. Well, there you guys have it. There is the option report. Definitely stay tuned for adjustments. Yes, we do adjustments on our trades throughout the week, and be part of it. Be part of the team. Once again, this is Coach G with TackleTrading.com.